Even those who are here, people are going. All right, so I hope you are seeing the screen. Can you see the screen now? Hello, are you there?
There we are seeing you.
Right. So the last time we started with financial reporting in public sector, basically, which is the central government and 8 agencies. And so we talked about we explained the component of the central government central government, which is the public fund, and then identify and explain the central government's financial system of Ghana. So when it comes to the public fund, we talk about Article 174, which is about tax revenue in Ghana, and then Article 175 to 178, which talks about the public fund. And so we said public fund is a fund into which all government revenue and expenditure that is it's a revenue, it's a fund into which all government revenue raised and received are paid into, and all expenditures are paid from that. And so the article came up with 3 main funds that are created as public fund. First one is the consolidated fund, and the second one is the contingency fund, and any other fund as may be established by or under the authority of Parliament. We explain what the consolidated fund is, and then explain what the withdrawal, especially the type of withdrawal or how to withdraw from the consolidated fund. We said there are 2 main conditions for withdrawing from the consolidated fund, and these are either the statutory expenditure or the non-statutory, the discretionary. So look at them and then be able to explain. We also talk about contingency fund, which is a fund set aside for contingent, urgent, or unforeseen circumstances, which may befall the country. And other funds that are created include this Assembly Common Fund, the Road Fund, the GET Fund, the Venture Capital Fund, Petroleum Fund, and Ghana Infrastructure Fund. I told you that when writing about these funds, all that you need to know is the purpose for creating this fund, which is the act that brought about the fund, and then the expenditure, the revenue into sources for this fund, and the expenditure that are charged to this fund. Those are what you need to know about the various funds we talked about. We talked about public, this Assembly Common Fund, the sources, and even the administration of this Assembly Common Fund, expenditure that are charged to it, same as other funds we talked about. So take note that for those other funds that are authorized by the Act of Parliament, you need to be able to know what the fund is about, which is the objective for setting the fund, and then the sources of revenue into the fund, as well as expenditure that are charged to the various funds, right? Then we now came to the public sector, International Public Sector Accounting Standard 3, Standard 9, and International Public Sector Accounting Standard 23. International Public Sector Accounting Standard 9 talks about exchange transaction and exchange revenue from exchange transaction. So we talk about revenue from exchange transaction, and the 23 talks about revenue from non-exchange transaction. At least we talked about the various explanation or the distinction between these 2 types of transaction revenue from the transaction. So exchange transaction is a transaction that occur within in the normal course of business, or that occur within 2 knowledgeable individuals, where an equal consideration is given for whatever payment or receipt you make or goods you supply. Then non-exchange transaction is where you receive without equivalent consideration. Okay, so that is explanation. So if you explain to understand what the concept about. For each of the standard, you need to know the objective of the standard, the actual transaction or actual treatment of the revenue or account for those revenue from the transaction, and then the scope of the transaction, terms that have been explained under various transactions standards, need to know them, right? So we talked about that one. A lot of things. It groups revenue from various activities that public sector undertake, which is about the three main transactions as a provision of services, sale of goods, and then interest, royalties, and dividend from transactions. All right, so those are the areas, and you need to know when to recognize revenue under each of these transactions. So read critically and be able to answer the questions on them. Hope you are getting what I'm discussing. We have gone through this thing already, and so it's a matter of making sure that you revise, right? So we have talked about all these ones. We have also talked about session 2. So event, past event, and all those ones. We have discussed all those recognition of transactions. Then when it comes to the non-exchange transactions, what we mean by stipulation, condition, and then conditions for transfer, and then restrictions and stipulations. All those things, you need to understand them. We have also talked about yeah, so we've got to unit 3, session 3, and we're supposed to deal with session 5. That is where we stopped. And so we are now moving to unit 3, session 4. What is the consolidated fund and final account for the central government? Consolidated fund and final account for the central government. We have also gone through the sources of revenue for government and covered entities, as well as expenditure classification. We did expenditure classification under the MTEF, which was somewhere ended to 2021, and then now the gift mix classification, which now give about 8 classification of the expenses. So take note of them, because that is what is going to help you to be able to prepare the accounts. That information will come if you don't know how to classify the transactions in terms of revenue sources and then expenditure classification. You'll find it difficult preparing final account for public sector. So when we talk of public sector, we are talking of the central government, which is the ministries, department, agencies, and then the office of government, as well as parliamentarians, judiciary, and executives, right? So we are now going to talk about the consolidated fund and final account for the central government. By the time we finish going through this session, you should be able to, at the end of this session, you should be able to prepare statement of revenue and expenditure of the consolidated fund. When I say revenue, you know what we mean by revenue, right? And then expenditure. So, and we know the sources of revenue for the public sector, and then classification of expenses under the public sector. So once we know this, then preparation of revenue and expenditure for consolidated fund won't be a problem. We should be able to also prepare statement of receipts and payment of the consolidated fund. I believe you know the difference between receipt and payment and then revenue and expenditure. If you have done account for non-profit organizations, you know clearly the difference between receipt and payment and revenue and expenditure. There's slight differences between them. For receipt and payment, you are only accounting for money you have received and money you have paid. But when it comes to revenue and expenditure, because some public sector have been asked to adopt accrual concept, the receipts and payment may be different from the revenue and expenditure, because revenue we know is earned when it's included in the revenue and expenditure account when earned, and not when cash received or not. As the same way, expenditure is included in the revenue and expenditure when incurred, and not when money is paid for it or not. But when it comes to receipt and payment, we are only accounting for money that has been received and money that has been paid. So whether if we have received money, yes, we include whether it is revenue or not. Once we have received, we include. Then once we have made payment, whether it's an expenditure, actual expenditure or not, we include. So you know there is difference between this revenue expenditure and receipt and payment. So same that we have in the public sector. Then you should also be able to prepare statement of financial position of the consolidated fund. When you come to the public sector, we have talked about what we mean by statement of financial position, right? So it is same as the assets minus liability equals to capital. So the same format we know for preparing statement of financial position in the private sector is what is applied here, except that the classification of assets and liability and this is a bit different from that of the private sector. Then you should be able to prepare statement of cash flow of the consolidated fund. But for this statement of cash flow, it has not been captured fully in your model. Maybe when you get opportunity to do public sector again during your master's, you may be able to do the statement of cash flow of the consolidated fund. But for this material, that aspect is not fully treated. But before we go on to look at how these accounts are prepared, let's understand what we mean by assets of the consolidated fund or the public assets. Because if you say asset of the consolidated fund, then we mean public asset, because whatever is in the consolidated fund is for the public. Therefore, asset of the consolidated fund can also be called public assets. And so we said public assets refers to the resources that are controlled by government or its entities as a result of past events from which future benefits are expected to flow to the government. You are not you are very much aware of this definition of assets from the accounting that you have done and from the earlier definitions we have given to the element of financial statements. So we know if it's in the private sector, we said resources are we said assets are resources controlled by an entity. In this case, the entity is the government. So the only thing you are changing from the definition is the entity. So the entity is now government or its entities. Okay. So we know assets are resources that are controlled by an entity. In this case, government or its entities as a result of past events from which future economic benefits are expected to flow to the government or its entities. So consolidated fund assets, or in short, public assets, are classified as financial assets and non-financial assets. So in the consolidated fund, the assets are classified as financial assets and non-financial assets. And of course, when we say financial assets, it is the asset in the form of acquisition of shares, bonds, and even the cash, right? If you have acquired shares, you have acquired bonds, you have acquired a treasury bill, all these are assets, but they are called financial assets. Non-financial assets are the physical assets we see, like the cash we see, the buildings, motor vehicles that belong to the public. All these are the non-financial assets. So let's quickly look at them. You should be able to explain clearly or differentiate between. You should be able to know what is public assets, and then what are financial assets and non-financial assets in the public sector. Please don't forget about this question. It is definitely going to come direct. So financial assets, as we all know, are monies paid from the consolidated fund for a public purpose that either requires repayment or confers ownership rights on the government. So it is the monies we pay from the consolidated fund for public purposes that require repayment or confers ownership rights on the government. So if we give loan from the consolidated fund, these loans that we are giving to institutions, other agencies, as a result of debenture we have bought from the organization or whatever thing, because that is going to be repaid, that payment we have made, which will require the repayment, is referred to as financial asset. Also, sometimes if the monies are not to be repaid directly, sometimes it confers some rights of ownership to the government. For example, if government uses money from the consolidated fund to invest in shares of companies, right, or startup companies, all these will confer ownership rights on the government. For example, if we government own shares in MTN, Vodafone, any corporate government GB, that is government business enterprises, government shares in them are the financial assets. They include cash and bank accounts, because when we have government have bank accounts, it is something that we can get the money from. Securities and investment accounts that can readily be converted into cash. Example of financial assets are cash and cash balances, advances. So, for example, if government gives salary advances to workers and this has to be repaid back, it is called, as part of the financial assets. Loans, revenues, receivables, equity investments, and investment in other securities. So this is about financial assets. These assets are monies paid from the consolidated fund for a public purpose that either requires repayment or ownership or confers ownership right on the government. And you can give the examples. Now let's look at non-current assets, public assets, non-current public assets. And these are assets that have physical substances with useful economic lives extending beyond one accounting period. So all the fixed assets that organization has, the government of Ghana have, or the government has, are referred to as non-financial assets. So these are assets that have physical substance with useful economic lives extending beyond one accounting period. They are held for use in the production or supply of goods and services, for administrative purposes, or for the development of maintenance of other tangible capital assets. So financial assets are to be used on the continuing basis and are not for sale in the ordinary course of operations. Example of financial assets or public financial assets or includes inventories. When government has, let's say, buffer stock, inventory at the buffer stock, our government warehouses, these are non-current, non-financial assets. Property, plant, and equipment, infrastructure, natural assets, and military assets. Okay, so all these are examples of non-financial assets, right? So having now differentiate between what financial assets and non-financial assets are, let's look at liabilities of the consolidated fund. So we're talking of public liabilities. Of course, we need to have asset and liability, be able to know our capital. So liabilities, of course, refers to a present obligation of government arising from past events, the settlement of which is expected to result in an outflow from public resources embodying economic benefits. So just the normal definition you know about the liability as in the ISB conceptual framework. The same thing here. Of course, we have even defined liability earlier as part of the element of financial statements. And so the same definition, no difference. That liability refers to present obligation of the government. Instead of saying entity, we are saying that the government arising from past events, the settlement of which is expected to result in an outflow from the public resources embodying economic benefits. And they often represent claims on government resources. Of course, those who have contributed to the government resources apart from government owned, anybody who has interest in the government resources, of course, will be a liability. Once this occurred as a result of past event and which result in settlement of money to the others. For example, those who have bought treasury bill, those who have bought government bonds, these people have actually have interest in the government, because their interest is that they have invested in government bonds and they expect to get their money back. So once this happened and government will have to pay them from its resources, becomes a liability. Okay, those who have borrowed money, international organizations who have borrowed money for which we have to pay, these are all examples of liability. So we say they often represent claims on government resources that the liability of government may comprise or may be grouped into three. First one is sundry creditor or payables of goods, services, works, and contracts. So all those institutions that government of Ghana buys goods or services or works and contract from them on credits, they become sundry creditors. Then we have trust monies and deposits made held by government in a trust capacity. For example, the SNIT money that have been paid to governments, they are not for governments, so they are liability for governments. You see, if government has received money in trust for some institution, such monies are liability for government. Government has to give them back to the owners. Then we have borrowing of funds. This borrowing can be both local and international. We can have local borrowing and international borrowing, both to result in domestic debt and foreign debt, right? So those are the liabilities. Now, how do we then get a final account? The final account for the central government. So the final account of the central government is known as the public account. So the final account that are prepared for the government, or which we refer to as the central government, is known as the public account. And financial reporting, that is public accounts, or what we refer to as financial reports. So public accounts are documents and records pertaining to public and trust monies received, held in, and paid from the consolidated fund. Remember that we said the consolidated fund is a fund into which it's a public fund into which all monies raised for and on behalf of the government are paid in, and is the same fund into which all expenditure are taken, right? So we are saying that when we talk of the public accounts, which we refer to as financial reporting in the public, these public accounts are documents and records pertaining to public and trust monies. And I have already explained what we mean by trust monies. Monies government has received in trust for other organizations like pension fund, pension contribution from companies, which goes to the consolidated fund back is a pension fund. And sometimes if we have some trust fund into which some monies might be paid into and we have received it, they are trust monies. Okay, so they are records pertaining to the public and trust monies received into, held in, and paid from consolidated fund, right? The responsibility for financial reporting in the public sector is on the Controller and Accountant General and the head of departments under the Public Financial Management Act. So if you go to all government institutions or covered entities, the accountants there are controller workers. They are government accountant. Controller is a government accountant. So when it comes to financial reporting in the public sector, it is the responsibility of the controller and accountant general. That's why in all public entities, you have controllers workers there, and they are in charge of the accounts. Of course, the departmental heads of the various covered entity are also responsible for preparing the financial statement. So the preparation of the financial statement is not the duty of the accountant there. The accountant there is the technical person, but the person responsible for those accounts is the management. And here, the head of department of that particular covered entity is in charge. Okay, so we include the accountant as well as the heads of departments under the Public Financial Management Act. That is the Public Financial Management Act that has actually given the responsibility of preparing the financial statement or financial reporting in the hands of the accountant and the heads of department in those covered entities. Hope you are getting the discussion clearly. If you have any difficulty in understanding some of the discussion, please let me. This is an online discussion, right? So feel free to interject and then get proper explanation things you do not get them clearly. It is the responsibility of the Controlling Accountant General for compiling the public accounts of the consolidated funds and any other fund under his care. And so the Controlling Accountant General is also responsible for providing or approving departmental accounting instructions. Of course, this instruction comes from the Control Accountant General. So the workers in the various control accountant in the various covered entities, because they are workers directly from the Control Accountant General, they come out with the guidelines that have followed. They approve on the departmental accounting instructions, classification of accounts, that is a chart of account, and making accounting policies for the public sector. This responsibility has been put at the doorstep of the Controller Accountant General. So financial reporting in the public sector is done monthly and annually as required by the law. So we have it monthly, quarterly, and annually, right? So you must prepare the account every month, and of course, after every 3 months, that is quarter reports, and then at the end of the year, the four quarters report will be put into as 1 year. So the account are prepared are done monthly and annually as required by the Public Sector Financial Management Act. Right. So the purpose of the financial statement right? You know, we all know what we mean, what we know the purpose, what the purpose of financial statement in the public sector. We told that financial statements are first of all prepared to actually show the financial position. But financial reporting in general, that one is supposed to, ensure accountability and decision making. But that is a general purpose of the financial reporting in the public sector. But we are talking of the purpose of financial statements. So financial statements are structured representation of the financial position. Financial statements are structured representation of the financial position and financial performance of an entity, right? So if you look at the financial statement of a public sector entity, we are going to look at the financial performance and then financial position, as well as other ones that we talked about the last time. We had a lot of classification of financial statement and non-financial statement that are prepared by the public sector. But the purpose of the financial statement are actually to ensure presentation of financial position and financial performance of an entity. The objective of a general purpose financial statement are to provide information about the financial position, financial performance, and cash flow of an entity that is useful to a wide range of users in making and evaluating decisions about the allocation of resources, especially the objective of financial specifically the objective of general purpose financial reporting in the public sector should be to fulfill legal and other requirements, right? So these definitions or the purpose we are giving, it's in line with what we said. It is to ensure accountability and decision making. So we are saying that specifically, apart from the fact that it provides information about the financial performance and financial position, as well as the cash flow about the entities, it specifically fulfill the legal and other requirements, because government institution must also follow the legal principles in preparation of financial statements. Once you are a government entity, you'll be required by law to prepare your accounts. And once you prepare the financial statement, you are also fulfilling that requirement. It provides information for decision making. Of course, the main objective for public sector financial reporting is to ensure accountability and decision making. So definitely, if you prepare the financial statements, one of the objectives is to actually provide information for decision making, and also provide information for planning and controlling. Take note of these few points. Then it also provides information. It also demonstrates accountability and stewardship of government for use of public funds. Once public entities prepare financial statements, it actually demonstrates the accountability and stewardship. We have already talked about accountability already. Stewardship is about people who have been entrusted with funds by others, accounting for how they have, used the resources to generate whatever benefit or whatever purpose for which the money was given them to manage. So it's about, if you are in managing position, you must account for your stewardship. So apart from accountability, it also ensures stewardship of government for the use of public resources, because all the government institutions have been giving taxpayers money, and they are supposed to manage the taxpayers' money to benefit the society. And so by preparing the financial statements, they are accounting for their stewardship of the use of the public fund. Then lastly, the specific objective is also, it measures financial performance of entities or institutions. As you prepare the statement of financial position, financial statement, one of the accounts you prepare is the statement of profit and loss and other comprehensive income, and that is about financial performance of an entity. Now let's look at financial reporting or financial reports in public accounts prepared by the Controlling Accountant General. Remember that we have already gone through in Unit 2 the component of financial statements in the public sector. A number of them, about 8 of them. But now we are looking at the financial reports of the public accounts that is prepared by the Controller Accountant General in all the covered entities. So the Controller Accountant General prepares financial reports on the consolidated fund monthly and annually. We have already stated that the reporting period is either monthly, quarterly, or annually, right? So Controller Accountant General in all covered entities will prepare financial report on consolidated fund monthly and annually. The annual financial reports are prepared in accordance with the generally accepted accounting principles and the financial laws. Yeah, so one thing you need to know is that accounting is a language of law. You don't prepare accounting just like that. We follow rules, regulations, and laws or enactments. So the annual financial reports are prepared in accordance with the generally accepted accounting principles, that is the GAAP, and then the financial laws. So if you come to public sector, we have already said that there are a lot of rules or regulations governing the way public sector accounting is prepared. The 1992 Constitution of Ghana, the Public Financial Management Act, and then the, what do you call it, Local Government Act, and then even the Companies Code and a lot of things. And where we have adopted the International Public Sector Accounting Standard, that also come in. So the GAAP is the International Public Sector Accounting Standard. If you have not adopted that, we are supposed to be guided by the Companies Code, and then if it is not about Companies Code, the Public Sector Financial Management Act, and how the public funds have to be managed. Those are the laws. So note that the public sector accounts or financial reports are prepared in accordance with the generally accepted accounting principles and financial laws. Then the monthly report is required to transmit to the Ministry of Finance not later than 15th day after the end of each month. So you know why, if after 15 you have not been validated. I don't know if you are working already, if you are teachers, you know the validation issue. The control accountant prepares the submission of these things monthly. So at the end of the 15th day of the, before 15th day of the month, if you have not been validated for payment, you will not be paid. So that's why we are saying that the Controlling Accountant General is supposed to prepare this annual monthly account and submit him to the Ministry of Finance not later than 15th day after the end of the month, right? Then we have the annual reports. The annual report shall be submitted by the Controller Accountant General within 3 months for auditing. So it means that if the financial year ends in January, by January, February, March, by March, the account supposed to be submitted to the Auditor General's Department for whatever work to be done on before, if there are infractions, it can come before the Parliamentary Select Committee, right? So that is it. Now, Auditor General is required within 6 months to submit its audit report to the to Parliament. So that is it. The Controller Accountant General first of all has to submit the financial reports, the annual financial reports, 3 months before the end of the year. That means that if it is 3 months after the end of the year, so it means January, February, March, right? Then after the Controller Accountant General has given to the Auditor General this account, Auditor General has also three more months. That is April, May, June, to also do whatever work they will do in the accounts and then submit their reports with the account to the Parliament. Parliament then will receive receipts and payment account in comparison with the budget estimates. Okay, so I think there's a mix-up here. There's a mix-up here. We are looking at the annual financial statements of the public sector and the content involved. Remember that we have already talked about these contents of the public sector financial statement. The first one is revenue expenditure statement, revenue and expenditure statement. Let's say revenue and expenditure statement. Then the second one is receipts and payments in comparison with the budget estimates. Then we have statement of financial position, statement of cash flow, statement of cash flow statement, or that is cash flow statements of the consolidated fund include this. I think there's a mix up there again, but yours, if you have gotten the right one, you can look at it. So is the this thing that has messed up here. So we have the fourth one is the statement of cash flow statement. Then the fifth one is a statement of public debts. Then the sixth one is a statement of public investments, statement of advances and loans, and note forming part of the account. So take note of the annual financial statement of public sector, the content of it. Then we have now we are taking them one by one. Statement of financial receipts, statement of receipt and payment. So when we talk of statement of receipt and payment, that means we are looking at all sources of receipts and payment. It doesn't matter whether money has been received for it. No, this one has to do with money we have just received. Any money we have earned but we have not received is not part of the receipt and payment. Take note of the difference between receipt and payment and revenue and expenditure, right? So here we are talking about receipt 4.4. We are talking about receipt statement of receipts and payments, and here we are saying that the statement of receipt and payments is prepared to show monies actually received. Have you seen? It is prepared to show money actually received and paid out of the consolidated fund. It's not about whether the money has been earned, whether it is earned or not. What we mean, we are talking of money received. In the revenue and expenditure, that one, if the money has been received but has not been earned, it will not be included. But here we are talking of the actual receipts of money into the consolidated fund. It excludes transactions that are non-cash in nature. So take note of it. Because if you have made payments, if you have gone to buy something on credit and you've not paid for, it won't come in here. If you have sold goods you have not received the money for, it will not come in here. We are only dealing with receipts and payments, right? So it excludes transactions that are non-cash in nature. The following is a typical format for statement of receipt and payment. And please take note of this simple account, receipt and payment. Take note of this simple account. If you are given information to prepare this, you should be able to do so. So statement of receipt and payment for the year ended at 1st December 20 whatever is given. Then you have normally, in public sector, if you are following the International Public Sector Accounting Standard 9, then budget must come, account must come with budgets. We have to have comparative budget and actual. So that's why you see these two. But maybe in examination, you know, be required to prepare both actual and budget. Maybe the actuals is what will be given to prepare because it may be historical data for you, or if it is budgeted system payment, that will be given. So, but we are presenting this one here for you to know that according to the International Public Sector Accounting Standard 9, budget accounts should be prepared in line with the budget from which that actual account is prepared, so as to know whether the users or managers of the funds are actually using or according are actually using the fund according to plan, right? So, but this is the receipt payment. So in the normal examination, you won't get 2 columns, you just get 1 column, right? So take note of that. So receipt here will include direct tax. Remember that we have the sources of government revenue. Tax is one of the sources of government revenue, and so direct tax, you saw examples of direct tax. Indirect tax, you saw examples of indirect tax. Then non-tax sources, non-tax sources like licensing, the fees, and all those ones, royalties, or those are non-tax sources. Then grants. Sometimes we get grants from foreign donation or foreign bilateral relations, or even the multilateral, which is the IMF and World Bank grants. Now, this comes in as also a resource. Remember that the government can also give grants to another country, or even an institution in the same country. That is also grant. But we are looking at the grant here. If you see grant as part of the revenue or the receipts, then it's a grant given to government of Ghana or any government by a bilateral relation or multilateral relation. Then we have domestic borrowings. So domestic borrowing here will be money borrowed through treasury bills and government bonds, domestic government bonds and treasury bills. This money is what we refer to as domestic borrowing. Then we have external borrowing. In fact, Kanoforata committed Ghana into borrowing a lot of money, and so by the time they were leaving, our debt toll, or our debt to GDP was somewhere 70 something to 80. That is a very dangerous one. However, external borrowing is also source of revenue to the country, or a source of receipts to the government. Then we have recoveries of loans and advances. If government paid or gave salary advances to workers, okay, or government has given loans to some people. Now, if these monies are recovered, meaning that the people who have actually borrowed or received these advances pay back to government, it becomes sources of revenue. So, sources of receipts. So, look at the source of receipts. When you put all these receipts together, we have total receipts. Then you come to the payment side. The first one, according to the classification by the gift mix, by classification by the Ghana whatever gift mix, I don't know the. So the first one is compensation, and you know this is about empowerment of the people, the employee government, the people government has employed. So all government salaries, entitlement, conditions of service, and all that comes in together to give us the compensation. Then we have goods and services. Like government will also, invest on properties, receive services from other organizations. Put together, we call it goods and services. So that will also result in payment. Then non-financial assets. Non-financial assets. If we purchase any non-financial asset, or the part of the non-financial asset that has been used, but that was the classification we did under the gift mix. So non-financial asset here is that part of the financial asset that has been consumed for the period. Then we have public debt interest, that is interest paid on public debt, domestic debt, public debt. And so the public debt is made up of both domestic debt and the foreign debt. And the interest paid on them put together is the public debt interest. Subsidies, government can give subsidies to some organizations to help them achieve certain services. Okay, if government wants to help people to expand their production or do something, it can assist them through subsidies. Then we have grants. Grants are given for some specific project. Okay, so if government is giving grants to support a particular project, that is different from subsidies. So take note. You can look at the difference between subsidies and grants. Take note of it because they are not the same. Subsidies are government subsidized work of others. For example, when it comes to the University of Cape Coast, it's a regular thing. Government subsidize the way we pay workers. But grants, so subsidies is normally something regular, but grants are more or less one point in time, right? Then we have social benefit. These are all classification of the expenditure under the gift mix classification. We have the MTEF one was just about 4 classifications, but this one gives about 8 classifications. So we have the grants. So you see, we have talked about the grants in the payment side and grants at the receipt side. I've explained the grants at the receipt side. The grants on the payment side here will include the grants that government gives to some institutions for certain projects to be undertaken. Then we have other expenditure that are not part of what we have mentioned. So if you have any expenditure that doesn't come into the classification of the earlier one, the social benefit, grants, subsidy, public debt interest, non-financial assets, goods and services for compensation, then that becomes other expenditure. So you need to know what will go into the social benefits, what will be under grants, what will be under subsidies, what will be included to be the public interest, and then non-financial assets, then goods and services and all that. You need to know what makes up them. That is what will help you prepare the account. Then we have the total payment. So when you take the total payment from the total receipt, you have cash surplus, what we refer to as deficit. So if you add, this one is more or less like the cash budget we prepared already. You know, we have done cash budget and the similar thing here. So once you have gotten the surplus, you add the start balance and then you get a closing balance. Then closing balance, if you have it more than 1 month, you will be able to carry forward the closing balances. So that is cash receipt and payment. Now let's look at financial reporting in the public sector. Still, statement of revenue and expenditure, statement of it. Now the statement of revenue and expenditure is prepared to determine the surplus or deficits for the reporting period. And here, the difference between the receipt and payments and then revenue and expenditure here is that under the revenue and expenditure, if it's a country that has adopted International Public Sector Accounting Standard, then you have to prepare its account using the accrual concept instead of the cash basis. So if you are using the accrual concept, then definitely the revenues that have been received but has not been earned will not be included in the revenue and expenditure. Certain expenditure that has been incurred but has not been paid for will not be included in here, as you see. Now, so the issue of the difference between the receipt and payment and then the revenue expenditure is about the use of accrual, where certain expenditures will not be included in the revenue expenditure. For example, so we have the direct tax as sources because these are the sources of government revenue. Then we have the grants, we have the indirect taxes, non-tax expenses. Remember that we have taken away what we mean by what we have here as what like borrowing, domestic borrowing, external borrowing, and those ones, because these are monies that have been paid, we have not received it. Okay, yes. So if it has to do with receipt and payment, it will be in the accounts. But when it comes to revenue, because we are talking of revenue end, if we have spent money and then if the money is gone, is expected to come back, these are not part of the revenue expenditure, right? So that's why the revenue expenditure does not include the loans and then the recoveries and all those ones, right? The expenditure classification there is the same thing because we can spend in all these areas. Okay, it's a matter of applying the accrual concept here rather than cash basis in the receipt and payment. So basically, the receipt and payment uses the cash basis, but the revenue and expenditure will use the accrual basis. So compensation, as we know, goods and services, computation of the fixed capital. So here, when we're talking of consumption of fixed capital, that is part of the fixed asset that has been used for the period, because we are talking of revenue and expenditure. So we have to match the expenditure for the period against revenue. So if you bought assets at the beginning of the year and you have used the asset to generate revenue for this year, but this asset is going to be in the business for more than 1 year, then that part of it that has been consumed to generate revenue must be included here. Remember that we are talking about accrual concept, which is in line with matching concept. Then public debt interest. This one too is a normal business expense, and so it will come in. Subsidies and grants, social benefits, and other expenses. So for the expenditure aspect, just as what we have in the statement of financial statement of receipt and payment, the same as what we have in the revenue expenditure, except that for the revenue and expenditure, for the revenue aspect, those loans and those things are not part. Then we come to the total. When you take the total of the expenditure from the revenue, you get the surplus or deficits, right? So that is it. Now let's look at the statement of financial position of the consolidated fund. The statement of financial position showed the assets, liability, and net financial position. Remember that. We said net financial position is different between asset and liability. Therefore, in the consolidated fund accounts, the statement of financial position is the list of the assets, liability, and the net financial position, which is the difference between the two, as at the balance sheet date of the reporting period. Please, if you have any question, ask. Okay. So a typical example or format of the statement of financial position of the public sector or the central government is as follows. We have the non-financial assets. Of course, we have already talked about non-financial assets and then financial assets. So non-financial asset here includes property, plant, and equipment. And here you have to include the net book value. What is the difference between net book value? I mean, how are you going to get net book value in the statement of financial position? Hello? Are you there? My student, are you there?
So we are here.
Yeah, so I'm asking. The first item on the statement of financial position is non-financial assets, property, plant, and equipment. And here we are saying that it's supposed to be the net book value. NBV is net book value. And I'm asking, how are we going to get the net book value here? Gifty.
So we are coming.
This one is a simple answer.
Yes, you deduct what do you call it, depreciation from it to get a net value.
You what?
You deduct depreciation from the amount of money that you use to buy the capital asset. That is a property plant.
What is that amount of money? What is it called? How do you call it? So you state the statement of the PPE at costs, get the accumulated depreciation, and take the accumulated depreciation from the cost to get the net book value. Can't you say this simple thing? All right. So that's how you get. Then we also have non-financial assets, infrastructure. So normally you separate the PPE from the infrastructure, and infrastructure here normally is the buildings. That one too, you need to get it in the net book value. So once you have the costs of that structure, accumulated depreciation for the period will be subtracted and you get the net book value. Then we have the investment assets, that is equity investment, the investment in loans and advances, gold holdings and other reserves, bank and cash accounts. All this one together will give us the total asset. Then you take the liability from the total asset and you get the accumulated fund, right? So we have the liability include the payables, which is same as the creditors, deposits like government monies, people's money deposited in the government account, domestic debt interest, external debt interest. No, this one is not the interest. It's the external debt, total external debt, domestic debt put together will give you the total debt. Then so you add the total liability. The total liability will be taken from the total assets, and you have the accumulated fund, right? Yes. So total liability from the total asset will give you the accumulated fund. When you add it to it, it becomes liability and fund. Liability and fund means that the capital and liability put together, right? So we are done with the accounts. Now look at this simple financial statement as a look at the structure of the account we are prepared and solve this question. Put it on the WhatsApp platform for me tomorrow. The following are the balances extracted from the public accounts on the consolidated fund from the year ended at 1st December 2016. So you have the year. I suppose this one is supposed to come here. The Ghana GHS 2000 supposed to be on top of the figures. Then you have the direct tax, compensation of employees. So you should be able to classify the transactions. That is all. Expenditure, group them into the various expenditure classification. Then group the revenue into the various revenue classification. That's all that you need to do here. So direct tax, compensation of employees, goods and services, non-financial assets, indirect tax, grants, interest expense, social benefits, other expenses, other revenue, national health insurance levy, depreciation and amortization, loan repayments, levies, loans received, loans recoveries, other payments, cash and bank balances as at the 1st December, as at 1st January 2016. Now you are required to prepare receipt and payment of the consolidated fund for the year ended at 1st December 2016. Then statement of cash and bank balances. So this one, if you prepare the account, you are only trying to determine the cash, because once you prepare the statement of receipt and payment, you'll be able to get the cash and bank balance easily at the end of the year. So the B is just part of the A. The B is just part of the A. The A is the most important thing to do, and the final result will be the B, which is the statement of cash and bank balances at the beginning and end of the financial year. You get that once very clearly, right? So just look at the receipt and payment formats. These are the receipt and payment formats. Sorry, this is the receipt and payment format, and I'm saying that in this question, we're not going to add the budget aspect. We're only doing once. So we have the direct, indirect tax, indirect tax, non-tax, grants, domestic borrowing, the external borrowing, recoveries and loans and advances. This is the revenue aspect. Expenditure include compensation, with goods and services, non-financial assets. What is the consumption? Yeah, consumption of assets. Then public account, interest, subsidies, grants, social benefits, and other expenditure. So, as well as the repayment of loan. So take note of those payments, and you can determine you can just do the work simple. I may give you that work somewhere, maybe change some figures and give you the work somewhere. So take note of them. If you have any question, you can ask as we move forward. Let's look at section 5 of Unit 3. When we finish the three sessions, we'll go because there's not much time. Yeah. So preparation of account for ministries, department, and agencies. Remember that what we prepared first is the consolidated fund, receipt and payments, and then income and expenditure, revenue and expenditure for the consolidated fund. Now let's look at preparation of accounts for ministries, department, and agencies, which we call the MMDAs, right? So by the time we finish going through this session, you should be able to explain the process of preparing and approving the annual estimate of the MMDAs, and then also explain the process in which government pays the expenditure of MMDAs. There's a lot of things in there. Some of them we'll discuss and then we'll move on so that you can be reading in detail yourself. So we are looking at the process of preparing and approving the annual estimate of the ministry, department, and agencies, and then also explain the process in which government pays the expenditure of the...
Sir.
Yes, please.
Sir, please, so we are begging the self-assessment questions, like if you can go through with us step by step.
Oh, okay. So just look at the sorry. This is receipts and payments. And we are talking of the sources of receipts in the public sector. We receive money from direct taxes, indirect taxes, non-tax sources. These are fees, licenses, and all those things, fines and those things we get, road tolls and those things put together, and then royalties, all at anything, any sources not coming from the taxation is what we call non-tax sources. And then we are talking of grants. And I'm saying that apart from these sources, when it comes to receipt and payment, money the government received from borrowing from the domestic market, like treasury bill, government bonds, money we received from such distance is part of the receipts for the period. When we borrow money from external institutions, it's also government receipts. And then loans that we have given, like salary advances and loans government has given to some entities, that we are supposed to receive them. When we receive them, they are all receipts. All right. And then the payment side is the classification of expenditure based on the gift mix. And we have the compensation, goods and services, non-financial asset. I'm saying this non-financial asset here is the consumption of the assets for the period, part of the fixed asset that has been consumed to generate those receipts, right? And then we have public debt interest, and this is made up of interest on domestic debt as well as the foreign debt or external debt. Then subsidies, I've explained them. So all then social listen, we have done this clarification already. So you know what makes up the expenditure. Yes. So yes.
From the formats we have here. And receipts, we have grants. Then under payments also we have grants. So
I explained to you that when we receive grant from international bilateral relations, when we receive grant, we can receive grant. Government can also give grants to institutions in Ghana and other countries. Once we get grants from other countries, either bilateral or multilateral, okay, Ghana can also give grants. The one Ghana gives to others or to institutions in Ghana is expenditure. The ones we receive from other organizations, other companies, other countries is income. That is receipts.
So from the self-assessment question, the grants here, is it that one will be under payments?
So the government, okay, we have grants. So you assume it to be government because we are, you see, when we come here, we are talking of compensation. No, compensation is an expenditure. Goods and services is an expenditure. Non-current assets. Non-current assets. We assume that we are buying. So non-current assets, we assume that we are buying. So it's expenditure. Then indirect tax is revenue. Grants take it to be revenue. Once the question has not been specific, assume that the rent is a revenue, right? Unless the question specifically has specified that grant received or grant paid. If it grant received, that becomes a revenue, and grant paid becomes. But if it is grant without any, assume that it is revenue. Interest expense, you know where it should go to. Then social benefit, you know where it should go to. Other expenses, you know where it should go to. Then, okay, so let us start so that you know. Direct tax, is it income or expenses?
It's income.
So receipts, you go to the receipt side. Compensation of employees, is it payment or receipts?
It's payment.
Good. Goods and services, is it payment or receipts?
Payment.
Good. Non-financial asset, payment or receipts?
Payment.
Good. Have you seen? Are you the only one doing it? Okay, fine. Then indirect tax, is it payment or receipts?
Receipts.
Good. Grant, assume it to be a receipt, eh?
Okay.
Interest expense, is it payment or receipts?
Interest expenses.
Interest expense, is it payment or receipts?
It's payment.
Payment.
Payment, good. Social benefit, is it payment or receipts?
Payment.
Payment.
Good. Other expenses, is it payment or receipts?
Social benefits, example of social benefits.
We have discussed this the last time we met. We have discussed this classification the last time we met, and what makes up social benefits. We talk of government providing social amenities, road, water, electricity, those things put together. They are all expenses. They are things government do to benefit the people in the society. So it's an expense, right? Provision of schools, water, accommodation, those things to make even the national health insurance. All these are but for national health insurance can be one side, eh? So that is social. So it's definitely expense. That's not it.
Yes, expenses.
Then other expenses, payment or receipts.
Payment.
Okay. Then other revenue, is it payment or receipts?
Receipts.
Good. National health insurance levy, is it payment or receipts?
National
health insurance levy. Look at it too. You say national health insurance levy.
Receipt.
Receipt.
It's a levy. When you pay the national health insurance, don't you pay? When you are renewing, don't you pay?
We pay.
Government receives it if you pay.
Yes.
Yes, so it's a revenue to government, so government receipt. Now, depreciation and amortization, is it payment or receipt? Depreciation and amortization, is it payment or receipt?
It's a payment.
My sister, you are quiet. You are confused.
It's a payment.
Yes, let her understand.
Payment.
Okay, explain why is it payment?
Explain.
The young man, why is it payment?
Please, it's payment because will be let's say the cost of an asset will be reducing, so we will deduct it from the asset. That's why.
We have already said that the consumption of non-current asset is part of expenses. For matching concept, when you have bought an asset for a period and you have used the asset to generate revenue, the matching concept tells you that that part of the asset that has been consumed for the period should be matched against the revenue. So it becomes an expense, right? Then loan repayment. Loan repayment, is it receipt or payment?
Payment.
Loan repayment. Loan repayment.
Repayment.
The expense.
Yes.
They didn't say loans paid though. Loan repayment means that those people have repaid. So you have given loans to people, and the people are paying back the loan. Is it not a receipt?
So we did not understand it. So it's
You don't
receipt.
understand. You don't understand repayment.
We are confused.
Blah. All right. So this one has to do with, for example, if you have taken loan from government or salary advance and you give it back. Okay.
Yeah.
Let me see. Loan. But we have loan recoveries too there.
Yes.
Okay, so it is the way the question has actually termed it. Because when we say repayment, it means that people are paying it back. But it may be because recoveries are just okay. So it can also be a repayment. It can be receipts.
Okay.
There can be credits and repayments.
Okay.
Yes, people are repaying. Others too, maybe they can be recoveries as well as repayments. So don't worry. Levies, are they receipt of payment?
Receipts.
Very good. Then loans received, are they receipt of payment?
Receipts.
Loans recovery.
Okay. So the loan received, is it payment or receipts?
Loans received. The one we are talking of receipt. Receives. So revenue received and revenue expense. And this one is loan received. So once it's received, you don't even have to ask question there. It's still received. It's part of the receipt. Okay. And loan recovery is part of it. It's a repayment that is supposed to be maybe loan pay or loan payments. So that one, that's where the problem is. Then other payments, where will it go?
Other payments, to go to payments.
Very good. Then you have the cash and bank balances at the beginning of the year. Where will it go? This one is receipt and payment. So where will you put it?
Below total payment.
So you bring balance carried down from last year. Balance brought forward. That is because before these payments are done, you have these balances at the beginning of the year, just like preparing cash accounts or receipt, whatever. So you bring these balances first. These balances come first. Then at the end of the day, you get the balance carried down, right? So that's why the question is demanding the statement of cash and cash balances at the beginning. Well, the beginning one is this one, and at the end. And at the end, after you have prepared, you get the end one. right?
So it means that you prepare the cash and bank balance before you be able to get the cash balance at the end.
So
Oh,
you start with the cash balance at the beginning, add the
okay.
receipt to it, take the payment out. The balance you get is the balance carried down, the closing balance.
Okay. Okay.
So you are starting with this balance brought forward. Add the receipts, get the total receipts, less payments. Then you get what? Get a balance at close. That's all.
That's carried down. Okay.
So
Thank you
see
very
the format. See the format.
Okay.
See the format. Hey, sorry. Where is it? So you have the, but what you can do is that this one, they started with the payment and receipt and date. You can start with the opening balance, then take away the payment, you get the distance. You can also do it the way we start with a cash budget. And you can do it, you can just get all the payments, get the receipts, then add the opening stock, opening balance to get a closing balance. That's all. Right. So you can do it now.
Thank you.
All of
Yes.
you do and submit it to my personal account. Let me check.
Okay. Thank you very much.
You're welcome. So let us see. Preparation of account for ministries, department, and agencies. So, per our objective, we are supposed to explain the process of preparing and approving the annual statement of the MMDAs, and also explain the process in which government pays the expenditure of MMDAs, and then explain the contents and format of monthly statement of revenue and expenditure prepared by the MMDAs, and prepare the annual financial reports of the MDA. Sorry. So first of all, the ministry, department, and agencies are the machineries through which the central government carries out its activities. We said the government of Ghana has so many duties to undertake. Now, you cannot do this alone. So institutions have to be built through which government can carry on its operations. So the various ministries and agencies and departments that are created are those agencies or the ministries through which the government machinery can carry out its activities. The ministry is the highest organization for the respective sectors and established by the president through an executive instrument or as approved or as provided by any other enactment. A ministry is constituted of departments and divisions responsible for respective sectors. So we have departments and agencies of the government. The department and agencies of government are created by or under the authority of the Civil Service Act. So the act for the ministry is the government's sole right to actually determine how many ministries they want to create to see to the implementation of their mandate as the government. Mahama Akufo-Addo created about more than 100 ministries, ministries. But Mahama has promised 60. And as at now, we have the 60 ministries. So the various ministers and their deputies. But apart from these, we have about 100 something ambassadors. Can you imagine? So whatever it is. But these ministries are the institutions through which the government carries on its activities. And under each of the ministries, we may have departments and agencies under them. We have talked about this already. So the functions of the ministry, department, and agencies are here. Some of these are reading, and as much as possible, I expect you to commit yourself to be reading them. If you have any difficulty, you can call for us to discuss. If I say I'm going to go through everything, that is going to be a big trouble. But then, when we say functions of the MMDAs, there are things you know already. They are to initiate and formulate policies taking into account the needs and aspirations of the people. So in the agri ministry, the minister there and 8 people in that ministry supposed to actually come out with policies that will help in promoting or developing agriculture in the country. The same way as Minister of Finance, Works and Housing, Ministry of Road, they are supposed to actually come out with things that, if we do, will propel the economy. So they initiate and formulate policies taking into account the needs and aspirations of the people. I don't know whose ministry actually came out with the building of the cathedral. I don't know whether it is under the Ministry of Finance or the Ministry of Local Government who saw the need to build cathedral instead of constructing road for Ghana. Anyway, but it is the duty of the ministries to come out with these policies. Then B, to undertake development planning in consultation with the National Development Planning Commission. So the various ministry, be it Ministry of Agri, Ministry of Education, Ministry of Finance, Ministry of whatever ministry, they are supposed to actually undertake development planning so that government in general will see to the development of this nation. They do that in consultation with National Development Commission, Planning Commission. And also they are to coordinate, monitor and evaluate the efficiency and effectiveness of the performance of the sector. So each ministry have a sector. So an agriculture sector, industrial sector, and this is, we have the various ministries there. And so the various ministry in these various sectors supposed to actually coordinate, monitor, and evaluate the efficiency and effectiveness of the performance of the sector. The MMDAs are managed. The MDAs are managed and headed by public officers known as the heads of departments. So apart from the political heads that are the various ministers, we have the heads of departments in the various institutions that are under the ministry. So they are the heads of those departments. The duties of the heads of department in the various ministries: the head of department shall manage and operate the department accounting system so as to ensure that accountability of all officers transacting such business and facilitate the efficient discharge of such business. So if you're head of department in a particular head of department in a particular ministry or a particular department in a ministry, you're supposed to manage the department accounting system. It is in your hands. It is not the accountant that is responsible for keeping proper account. You, as the head of department, your responsibility to ensure that the accounting system maintains so as to ensure the accountability of the officers that are transacting such businesses and facilitate the efficient discharge of such businesses. You are also to ensure that the department accounting system has been approved by the Controller Accountant General in consultation with the Auditor General. So if you are head of department, whatever accounting system that you are using, you ensure that they are in line with what the Controller Accountant General has approved of. You don't do anything different from what Controller Accountant General has approved. This Controller Accountant General actually comes out with the guidelines as a result of consultation with the Auditor General, right? So that after you have prepared your account, the Auditor General will have no problem with it. Because if you don't, and you prepare your account with any means, and then it is not in line with what the Controller Accountant General has requested, and therefore it's at adverse with what the Auditor General needs, then definitely you are going to appear before the Public Account Committee of Parliament to answer questions. Okay, because whatever infractions that come with how you have prepared your account, you as a head of department, you are going to be responsible. Also, as head of department, you secure the efficient and effective use of appropriate efficient and effective use of appropriation and a departmental control within the ambits of government policy and in accordance with any enactment, regulation, or instructions issued under the authority of any enactment. So, for each appropriation that are allowed the department, there are controls that that are in line with it. Okay, what your budget outlines, items that you have budget for which appropriation have been given for you to, spend for, are in line with the various controls, okay, or policies with which you have to use the money. So you must follow those controls within the ambit of the government policy, because whatever money that have been given you, there are policy regarding its usage, and so you have to ensure that this has been followed and you comply with any enactment, regulations, or instructions that have been issued for the use of those money under the authority of the enactment. You also have to secure the due and proper allocation, the due and proper collection of government revenue collectible by the department within the terms of the enactment of. So if there's any money that you are responsible for collecting on behalf of government, you have to, do that within the terms of any enactment of the instruction issued or approved by the Control Accountant General in terms of receiving that money. Request, commitment, order received. Requests, commitment, order received, and make payment. So you have to request, commit, order, and receive and make payment for goods and services within that. So these are a lot of functions that the heads of department in the various covered entities or the various department in the various ministries have to be held responsible. That is the duty. Go through and then pick some of them so that in case you are asked the question, you'll be able to. Now let's look at the method of financing the expenditure and commitment of the MMDs. My phone charger will go off, will go low very soon. Let me look for some place and charge it, because where I am, there are students, the students are all around in the classroom, so I couldn't go to the classroom. I have to find myself somewhere. But now let me just try to locate where I can get a charger, a socket, and then be charging. If not, it will go off very soon, right? So today, give me some time. Those whose husbands are waiting for them, please, I beg, tell them that we're a bit late, so we want to get some time for ourselves, right? So I'm moving to where I can get some socket and you plug it. So it's about the method of financing the expenditure and commitment of MMDs, right? So start reading, go through as I look for some place to charge my phone. Hey, no. I'm moving up. Hello. Hello. Can you hear me?
Yes, sir.
So what
Yes,
did I
sir,
do?
we can.
Because I was saying hello, hello, hello. Nobody was here, and I was asking whether you are here because there are some students here. So because of that, I've actually lowered my tone, and I was asking whether you can hear me, and nobody was responding. Before I realized, it's like I was offline. Now I've thought plenty.
Sir, when? Because you just talked though.
I just stopped
We
there.
just heard from you. Yes, we
Sir,
just heard
you
from
said that
you.
you were going to look for a place to charge your phone.
Since then, you haven't heard me.
No,
Yes.
Hey.
we just heard from you.
So since then, I've spoke from here. Oh, we started with the what? I'm almost finished with the unit 3, unit 5, section 5.
Hey,
So all these things
no,
you wow. Oh, oh. I didn't have the phone here too, so nobody called. All right. So I have talked about this duties of the head of departments. That one you heard me.
yes, sir.
Yes.
Yes. And then we talked about the methods of financing the expenditure and commitment of MDs.
Yes.
Yes.
No,
So I was
that is
saying
where
that many of the ministry, department, and agencies, the amount of money they need to undertake their operations in order to achieve the objective for which they are set up may not be enough from what they have generated internal. And so many of the times, central government has to finance them through other means. And so we are looking at the common methods that the central government may finance the activities of the ministry, department, and agencies. And one of them we said is appropriation. And this appropriation is so under for us is vote. And this is just a means of what? Parliament approving the estimates by the ministry, department, agencies that was submitted to them. Once Parliament approved the budget that the ministry submitted, then it becomes an appropriation. It becomes appropriation because that money has been voted for them, and so they can spend from it. So one means of financing the operations of the MDAs, I said, is appropriation or vote, right? And another means is subsidies. We have already talked of subsidies before. This is where government subsidize the expenditure incurred by some MDAs. Some of the MDAs are allowed to operate their own, generate money to finance the operations, but sometimes government subsidize them. For example, when it comes to the University of Cape Coast, we are subvented institution. We generate enough money here to do things, even though those monies are public money, but government can allow us to use, but they pay for compensation and all that for the university. So government can also finance some of them through what do you call it? Subsidies. Then we have the compensation transfer. This is where the government pays the compensation, social security contribution, the pension and gratuity of the employees of the MDAs for their services. See, so once you do your everything, but your workers and things are being paid by the government, that is one means to finance them. The government can also, ask the MDAs to retain some revenues that they have generated internally. We call that revenue retained. And so some of the MDAs are allowed by government to keep a portion or whole of the revenue generated internally to finance their activities. And this is known as internal generated fund. This internal generated fund is non-tax revenue that are generated through the activities of the department. Now, I've told you the various activities that some of these MDAs engage in undertaking or receiving this, generating this internal generated fund, right? Then we have grant and donation as also one means that government or central government can finance the MDAs. And when it comes to grant, in most cases, government provides grants to its MDAs. And like I was saying, this type of grant, what you said, is the expenditure for the government. If you come to government accounting, this grant is going to be an expenditure because government is actually providing these grants to some ministry department within the country to finance their activities. And these grants are mostly in the form of cash or in kind. And then I've talked about the voter accounting. I finished with that already, and you didn't hear. So we talked about appropriation or vote. So this appropriation or vote is the estimate that the various ministry and department will make that the parliament will go to and approve for them. Once parliament gives approval, it becomes the money is voted or appropriated for them to spend. So the spending organizations can then appropriate the money to finance their programs or projects in order to accomplish their objectives. The process of accounting for that vote, the process of accounting for this vote is what we refer to as vote accounting. So vote accounting simply refers to the integration of the budget amount into the financial accounting system for the purpose of budgetary control and comparability of the financial report. Remember that I said International Financial Reporting, International Public Sector Accounting Standard 24 talks about budgeting in public sector. And the recommendation is that public accounts or financial accounts should be prepared in line with the budget so that we can compare actual with the budget. So that is about vote accounting. So in vote accounting, under vote accounting, the spending organizations are required to submit their estimate, which is the budget of their expenditure. And once those expenditures are approved, the spending organization is entitled to then make spending in accordance with the spending plans. And of course, the spending plans is their budget, because in their budget, you have stated how you are going to spend the money you have budgeted for in terms of various items you are going to spend on, and that's what you have to do. Okay, so the budget figures are then incorporated into the accounting system. So if you are preparing your accounting, it means that after you have actually, appropriate the money to undertake your activity and you are preparing your account, it should be incorporated with a budget so that we can see whether you have performed in line with the budget or not. And that is what we refer to as the vote accounting. So the budget figures are incorporated into the accounting system to facilitate generation of budget performance report. And then I was talking about the vote book. I have already finished that one too. So the vote book is just a record of payments, and it's a record of payments made and liabilities incurred under the votes or funds are approved for such ministry. So if you have made payments and then you have also taken some liability, the book in which you keep all this record in is what we call vote book. Okay, so it's just a record of payment made and liability incurred under the votes, and under the vote means that under that appropriation money, that amount of money that has been voted for you. So whatever payment you have made, whatever liability you have incurred for that particular amount that was prepared for you, is what we call the vote book. So the funds approved for each ministry, department, and agency. A vote book is maintained for each head of expenditure. So for each head of expenditure, for example, in your budget, if you have, let's say, road and transport, whatever, if you have administrative and license, and the amount for each of them has been captioned in your budget, you have a vote book for each of these account heads. Each of these account heads or expenditure heads. So a vote book is an integral part of budgetary control system. It is designed to ensure that expenditure incurred are not in excess of appropriation. So once you have the vote book, whatever expenditure you are making under each of the account heads in the budget, you cross-check with how much you are spending. So the essence is that it is to ensure that the expenditure you are incurring are not in excess of what you have been allowed to spend. over expenditure of the department votes amount to reckless use of public funds and is seriously frowned at by the government. So if you have spent more than what you have been appropriated for, then it is an over expenditure, and it's a very reckless something that the public sector funds on it. So that is about this. And then we have appropriation and annual estimate. So here too, I want you to read most of the things. So the difference you need to know is appropriation in aid and appropriation bill. Okay. So if I should take my time. So when we talk of the appropriation in aid, an annual estimate may include income that the department receives outside the budget allocation. Such income is referred to as appropriation in aid. So what we're saying is that for appropriation and annual estimates, the appropriation means an authorization made under an appropriation or act permitting withdrawal out of the consolidated fund or any other public fund. That is the procedure through which funds are made available to spending organization. So when we say appropriation, it is the act of approving the budget that the ministries and ministries submit to Parliament. And these budgets are in the budget that the finance minister presents to the Parliament. And so the process of approving the bill, the appropriation bill, call that one appropriation. The bill, if the budget is passed into a bill, then Parliament will discuss that bill and then approve of it, and that is what we call appropriation. So appropriation means an authorization made under an appropriation act, because if a bill is passed, it becomes an act. Take note of that. So the budget that the executives or the government will submit at the beginning of the year will then be passed into a bill, will be prepared as a bill, then put before Parliament for Parliament to discuss. Then when they are okay with it, they will now pass an appropriation act. Then so the bill now becomes an act or appropriation act. And then this appropriation act is something that is permitting withdrawal of money from the consolidated fund or the public fund. So this is the procedure through which the funds are made available to spending officers or spending organizations. Before the appropriation begins, before the Parliament will now begin the process of appropriation, annual estimate must be prepared. The budget must be prepared first. Annual estimates are the statement indicating the expected revenue and expenditure to be made by the government organization in the coming year. So the annual estimate here is the budget, and at the beginning of each year, if ministry, department, agencies will be made to prepare their estimate in terms of revenue and expenditure, they expect to be made during the year. Okay, they are prepared and submitted by by each to the government to assist in the preparation of the government budget. So all the department, agencies, and ministries will prepare their budget or their estimate of revenue and expenditure for the period, and then this will be submitted by each of the departments and the agencies to the Ministry of Finance, and this will be put into the government budget. The estimate comprises the estimate of revenue and expenditure. This is clear. Then the annual estimate, which is the annual budget, may include income that the department receives outside the budget allocation. So if in the operation of your budget, you expect to receive some money outside the budget, government is generating, you have prepared a budget where you expect to get money somewhere. That money you expect to get outside the budget, we call it appropriation in aid. So we said annual estimate may include income that department receives outside the budget allocation. Okay, so the budget allocation is the one that we are going to take from the consolidated fund. If you expect to receive some money outside what you are going to take from the consolidated fund, that amount is referred to as appropriation in aid. Please, if you don't understand something, let me explain clearly to you. It refers to any income to an MDA outside the budget allocation. Such incomes are set off against the budget allocation before disbursement is made. So once you expect to receive that money outside your budget, it will be set aside, it will be offset. I mean, it will use to reduce the amount you are going to receive from the budget before your allocation is made. Such incomes are set off against the budget allocation before disbursement is made, and they include donor grants, retained internally generated fund, and other receipts. Right. So that is appropriation in aid. Any amount of money that is outside your estimated budget, okay, is what we call appropriation in aid. Then, after approval of estimate of expenditure, appropriation bill, I told you that after the budget has been approved, it will now be passed into appropriation bill. Is introduced, providing for the issue from the consolidated fund of the sum necessary to meet the expenditure and the appropriation of those sums, and that's separate vote for the several heads of expenditure approved to the purpose specified in the bill. Now, this estimate of the expenditure of all public offices and public corporations other than those set up as commercial ventures shall be classified under regular programs or activities. So all that we are saying is that before the Appropriation Act will be passed, the annual budget must be converted into appropriation bill, and the Parliament will now debate on it and then approve of it and becomes an appropriation act here. So when an appropriation bill is approved by the Parliament, it becomes an appropriation act. So appropriation act is an act passed in accordance with Article 179 of the Constitution, which authorizes withdrawal out of the consolidated fund or any other public funds for the financial year. So whatever budget the various ministries submitted to the Minister of Finance, which have been put into the budget, will now converted into appropriation bill. Then Parliament will now deliberate on it and then pass the bill. When the bill is passed, it becomes now appropriation act. And once the appropriation act, this is in line with the 1992 Constitution, that's section 179 of the Constitution. And so that is it. Then we have the vote management. So now, once the various heads of the expenditure have been made, and then you have a vote book to keep records on the various heads and how much you should spend on them, then you have the vote management and control. So the heads of department have the primary responsibility of managing and controlling the departmental vote. They are regarded as vote controllers. So the heads of department are also referred to as the vote controllers. And so the functions of a vote controller is here. The functions of a spending officer, please, you need to be reading some of these things. There are a lot of them. One thing you need to understand is what we mean by financial encumbrance. But this financial encumbrance was used previously. This is, they don't use it anymore. Okay, we don't use it anymore. So financial encumbrance here is a document for expenditures of an organization. It permits the MDAs to request disbursement from the public fund. It is often prepared by the vote controller on the basis of the budget allocation. It must be noted that financial increments are no more in use. They are rarely used for requesting funds from the ministries. Previously, that was what we used to request funds. You know, the funds have been approved for the various heads of expenditure or revenue heads that you have. So if you want to request money, you raise financial encumbrance to now request for the money for spending. That is what it is. Now, release of funds to meet expenditures. after Parliament has now approved the annual estimates. Hello, my student, are you there?
We are here.
Can you hear me clearly?
Yeah, we can hear you, Pa.
There's some student here. That's why my tone is now. I don't want to disturb them. Right. So we are saying that the release of funds to meet the expenditure warrants. So after Parliament has approved the annual estimates, authority to commit funds is conveyed. Once Parliament has approved the annual estimate or annual budget as a result of the Appropriation Act, then authority to actually commit funds is conveyed to department by the issue of warrants signed by the minister on behalf of the government and copied to the Controller and Accountant General. So once the bill is passed, the appropriation bill is passed into Appropriation Act, the Finance Minister can then raise what we call expenditure warrants, giving the authority to the various ministries, department, agencies to now spend. Okay, so he issued that warrant on behalf of the government to the various to the Controller Accountant General, and then Controller Accountant General can then advise the various heads of departments to now disburse the money. So disburse funds to meet expenditure is conveyed by the issue of cash release instruction signed by the minister on behalf of the government of the control on behalf of the government to the Controller and Accountant General. So once the warrant is signed, that means that the money can be issued, cash can be issued to the Controller and Accountant General for the money to be spent. Upon the issue of the warrant, what we call the expenditure warrant, the authority conveyed by the provisional warrant shall be lapsed. So provisional warrant is here is, for example, when before the year starts, when we are in an electionary year, we are told that the government in power cannot prepare the budgets because they are not very sure whether they are going to win the election to continue their governance or what. So what to do is that you are allowed to prepare a provisional budget for the first quarter, and this is supposed to cover only recurring expenditure that will help to help government machinery to operate, so that the government does not come to a halt. Because if you have not prepared the budget at the beginning of the year, then the government machinery have to come to a halt, because we cannot spend if Parliament has not approved money for you to spend. You cannot spend. Therefore, it will come to a halt. So the present government will be allowed to prepare budget at the end of the year, at least 3-month budget, so that even if they don't win, the next government will then still will operate to that, because that budget, that 3-month budget, will have to be approved by Parliament. And once Parliament approves that one, the money can be taken to operate. So as soon as the budget prepared by the year, when new government comes and prepares their budgets, and that one is approved, then the provisional warrant, because the warrants, the warrants that the ministers the appropriation that the minister gets to actually spend money from the provisional budget. Okay, he does it through the provisional warrant. And so if the actual budget for the year has been approved, then the provisional warrant ceases. So let's know the difference between the expenditure warrant and then the provisional warrant. Okay, so provisional warrants will lapse, and all expenditure made under the provisional warrant shall be deemed to have been made under the authority of the warrant. So the warrant is the authority given to the minister to spend from the budget for the year. So if there are provisional warrant for previous that one lapse, and it is assumed that whatever expenditure that has been made on the provisional warrant has been incorporated in the warrant for the year. So provisional warrant here is where the estimate are not approved before the first working day of the financial year. The president, by provisional warrant and with approval of parliament, shall authorize the withdrawal from the consolidated fund monies of an amount not exceeding 1/4. I see that's what I was saying, 1/4 of the amount included in the draft estimate. So monies withdrawn shall be for the purpose of meeting expenditure on government programs and activities in respect of the period expiring. So 3 months from the beginning of the financial year or immediately before the approval of the consolidated fund expenditure estimate. So the provisional warrant has to do with that either 3 months before the financial year when the actual budget has not been approved, where the government will seek approval of the parliament to now continue to spend within the first quarter. And once the actual budget has been submitted and is approved, the provisional warrant ceases. And it is assumed that whatever money that has been spent in the provisional warrant is deemed to have been spent in the actual warrant for the period. So take note. Then we also talk about the release of funds. Release of funds. Release of funds to departments shall be in accordance with warrants issued by the minister or the minister's authorized representative with copies to the Controller Accountant General. So it is only the minister that can actually release funds from the various ministry, department, agencies to use. So once the budget has been approved, the minister gets the what do you call it? The Appropriation Act, and based on the Appropriation Act, he issue warrants for the money to be released to the various ministries. The ministry shall issue cash instruction to the Controller Accountant General for the transfer of cash to the operational bank of the various departments. So that is it. And without prejudice to the above provision, where a revote has been approved, disbursement may be done in arrears. So the balance of appropriation and all that, you need to take note of this appropriation issue, maintaining account maintenance under the vote accounting. So for the following accounts are maintained under a typical vote accounting. And so we have the Controller Accountant General departments. They may also, keep accounts. This account is used for the compensation paid by the Controller Accountant General on behalf of the MDs, because Controller Accountant General has an accountant for all the ministry, departments, and agencies. And so they also prepare accounts. And their account, this account is used for the compensation. I mean, the compensator is paying the employees of the Controller Accountant General on behalf of the ministry. So you can see that the accountants in the various ministries are not on the payroll of the various ministries. They are all under the Controller Accountant General's payroll. So the Controller Accountant General's department accounts is an account that is used to actually for the compensation paid by the Controller Accountant General's departments on behalf of the MDs. Then we have parliamentary grant accounts. This account is kept to record approved estimates of spending organization as compared with actual expenditure. So the parliament also keep account of the approvals that they are giving to the various ministry, departments, and agencies. So that parliamentary grant account, it is an account that is kept to keep approved estimates of spending organizations as compared with their actual. Okay, so how much have you been allowed that the parliament approved for you, and how is your actual, and they can compare. That is where they can get people who are not abiding or who are not actually managing or spending in line with the plan of their budget. Then we have the consolidated fund account. This is used to record funds received from the consolidated fund. And then we have the bank account for the various departments and agencies. Then we have various expenditure account as well. So these are the accounts maintained under the vote accounting system. take note of them. Then we have appropriation account. This is prepared at the end of every year. The appropriation account is prepared at the end of every year, accounting for the monies voted by the parliament, because the amount appropriated for you is the amount that you have been authorized to spend. So the appropriation account is prepared at the end of every year, and it's actually it's account for the monies voted by the parliament. Amount voted the same as the amount appropriated. It is in the form of receipts and payments showing expenditure analyzed into budgeted heads, comparing such expenditure items with the budgeted estimate for the particular fiscal year. It is prepared for each vote, and signed by the principal spending officer. So an appropriation account shows the service for which the monies spended were voted, then sums actually expended on each service, and then the state of each covered entity compared with the amount appropriated for that covered entity by parliament. The format of the appropriation accounts are then shown below. So let's look at the appropriation account for the year ended 31st December 2022.
Sir, your screen is not showing.
My screen is not showing. Hey. And since when? Oh.
Since you came back.
And you will not tell me. Oh. So when they came back and I was explaining that this notion, you didn't tell me. If you see anything,
Just listen.
It's because now you want to see the time to end, the format, that now you realize that you have to. My charger's price even off. So this is the appropriation account for the year ended 31st December 2018. So we look at the estimates, actual. Estimate, that is the appropriation. Actual expenditure. So the estimate here is what was approved, and that's why we call it appropriation. So appropriation is the estimate that was approved by parliament. So you have the various expenditure heads. One of the heads is compensation of employees. Actual, you put it there, and then budgeted. That was approved. Then actual. Then you look at under or over. If it is under, it means you have been under. What if it is under means that you have underspent. If you have overspent, you also indicate. Then you come to goods and services. What was approved or the budgeted approved, and then the actual you have incurred, whether it is more or less, look at the difference, either under or over. Then you come to assets, you look at under or over. Then you come to total expenditure. So you have the total expenditure here, under, over. Then less appropriation in aid. Appropriation in aid, we said it is the amount outside what is budgeted. So if, for example, you have budgeted for 100,000 and you expect that you are going to get 20,000 from maybe a external organization, then they will set that 20,000 against the 100,000. You have budgeted for 100,000, but you expect 20,000 from maybe USAID. Okay, so this amount we are expecting from is appropriation in aid. It will be deducted from the supposed to be deducted less. So that's why I say less appropriation in aid. Then you take that one from it. Then you have total expenditure. Okay, then total grants that has also been given. Then you have surrender to the consolidated fund. So if you have monies that you have surrendered, sometimes if you have, you see, if some people, for example, if you collect money, somebody did not come to work, they say your money will be returned to government chest. It means it will be returned to the consolidated fund. So surrender to the consolidated fund means that maybe the expenditure item is no more going to be listened, so you send it back to the consolidated fund. So then you have variance, the variance, the difference. You have the balance there. So this is an example of an appropriated fund, and it is just comparing the appropriation, that is the estimate, with the budgeted, and then find out whether you have underspent or overspent, and that is a clear indication of how well you have performed, right? So the content and format of financial report of MDAs, we are going to look at that. The heads of departments is required to prepare and submit financial reports to the Controller Accountant General on monthly and annual basis. So you see the information here. According to the Ghana Financial Management Act, it's the heads of department who are then responsible for preparation of the financial reports. The accountants there, who are Controller Accountant General, are supposed to assist, and at the end of the day, Controller Accountant General worker, they're supposed to submit the account to the Controller Accountant General. We said that must be done at least first 3 days, first 3 months after the 3 months after the year end. So it is the duty or the responsibility of the heads of department in the various ministry, department, and agencies to prepare and submit financial report to the Controller Accountant General on monthly and annual basis. Then, so the monthly statement, the heads of department shall submit monthly statement of revenue and expenditure to the Controller Accountant General. So, first of all, revenue and expenditure from the various ministry, department, and agencies. This must be this must be prepared annually, monthly to the Controller Accountant General. The form of the monthly statement shall be provided for in the departmental accounting instructions, as well as and shall include the statement of. So if there are guidelines of doing this in the various ministry, departments, and agencies, how to prepare the monthly financial statement. Okay, the monthly revenue and expenditure account is given. The guidelines is given, and this instruction can include: 1, expenditure against warrant for the month. So the warrant is the authorization you have gotten to spend. So how much have you been allowed to spend, and how much have you spent? So expenditure against what you were allowed to spend for the month, you will prepare that account. Then non-tax revenue collected and paid into the consolidated fund, you also have to actually account for all non-tax revenue that you collected and have been paid to consolidated fund, and then revenue and expenditure of retained internal general fund. So any amount of revenue and expenditure revenue you have actually generated and then retained, all those information must be provided. Annual statement of the departments, that one within a period of 3 months or such other periods as Parliament may be resolved, may by resolution appoint after the end of each financial year. The heads of each department shall prepare and submit to the Auditor General, the minister, and here when we talk of the minister, we're talking of the Minister of Finance, and then the Controller Accountant General, in respect of the financial year, account of the department, which shall comprise 1. So you see the difference between what must be submitted monthly and what must be submitted annually. So for monthly, whatever expenditure you have incurred against what you are allowed, the warrant per month, the revenue you have collected, non-tax revenue you have collected and paid into a consolidated fund, and then the revenue and expenditure of a retained internal generated fund. Then for the annual expenditure, an annual account, we are going to have statement of financial position showing the assets and liabilities of the department at the end of the year. Then statement of revenue and expenditure for the period, statement of receipt and payment for the period, cash flow statement, and there are some of them we are not going to deal with it. Cash flow statement of the department for the year, and the notes that form part of the accounts, which include particulars of the extent to which the performance criteria specified in the estimate in relation to the provisions of the department output were specified. So the notes to the accounts are, so if you look at the accounts you are preparing, they are basically what we have gone through earlier, or even in line with the statement, the private sector account, that is the ISB conceptual framework, because the accounts are first the statement of financial position. You know what goes into the statement of financial position is the asset, liability, and the financial position. Then we have the statement of revenue and expenditure, because it is a government institution, a public ministry, department, agency. They are not specifically producing for profit, so definitely they will account using the revenue and expenditure account for the year. Then a statement of receipt and payment, then cash flow statement, notes to the accounts. They don't talk about statement of changes in equity. So take notes. So let's look at this, a typical example of the revenue expenditure. It is almost the same as what we did under the, what do you call it, the central government receipt and payment. Okay, so the receipt and payment, this is revenue and expenditure, revenue expenditure. So we are looking at receipt from consolidated fund, because that is the revenue that we are getting. Then for ministry, department, and agency, the money that have been appropriated for you from the consolidated fund. So that is receipt from the consolidated fund. Then grants and donations, if any, you have gotten donations or grants from other bilateral or multilateral institutions. Then we have the internal generated fund, where you have been allowed to retain some of the revenue you have generated internally. This is what makes up the public sector, the ministry, department, and agency source of revenue. Total revenue here, less expenditure. Expenditure is in the 8th classification of the expenditure items according to the gift mix. According to the gift mix, expenditure revenues are grouped into the compensation of employees, goods and services, consumption of fixed assets, interest, what do you call it, expense, grants, social benefits, and other components. So we count 1, 2, 3, 4, 5, 6, 7. So there are 7 classifications. Okay, 7 classifications. So this becomes the total expenditure, and then you take the total expenditure from the revenue you have gotten, your deficit or surplus. So please take note of the items in this revenue, income, and expenditure account. Okay, take note of it very carefully. We are talking of receipts from consolidated fund, grants and donation, internal generated fund. Okay, if there could be other, in a typical examination, there could be other sources. This is not limited. There could be other sources, but when you see revenue, you should be able to see that this is revenue. And when you do the expenditure, you should be able to see what is expenditure, right? So we have the statement of financial position. And for the statement of financial position, we are talking of non-financial asset. That will come first. And we start with building construction. Sometimes you have to even put all of the property, plant, and equipment together. PPE, property, plant, and equipment together. So it's about the kind of question that I've been given and how you can classify them together. So we have building and structures, of course, marshalling of assets. Asset in the financial statement must be arranged according to their permanency. So building and structures come first, machinery come first, come second, work in progress, other non-current assets, and then inventory. Then you have the financial assets. Financial assets, we have investment, advances, bank, and cash. Okay, so unlike the private sector where we have current and non-current assets, here we have financial and non-financial assets. That's all. Okay, so it's about the classification. It's the same thing that we know from the profit and loss, the private sector accounting. Right. So total expenditure, a total asset, of course, should be matched between the should be equal to liability and fund. Fund here is the capital. Fund here is the same as the capital. So liability and fund, and what is the liability? Liability includes payables, deposit and trust monies. Then total, you have the liability. Then you have reserves, accumulated fund. Those are the fund. So when you add it together, they should match up to the assets. you know how to balance balance sheet. Asset is equal to capital plus liability. So these are assets, financial plus non-financial assets, liability plus fund. If you don't have the fund, if you don't have the funds and you have the liability, you have the asset, you should be able to get the fund. Take note of this thing. So let us look at some self-assessment questions. Explain 4 methods of financing the expenditure and commitment of MDAs. Of course, they are fair. The first one is appropriation or vote. Second one is subsidy. Another one is retained revenue, and then compensation transfer. So you should be able to answer the questions clearly. Then explain the vote accounting system, distinguish between provisional warrant and revolt warrants. Okay, so take note of the questions. Now let's look at the last session and we go work examples. So the last session of unit 6 is about work examples. It's about work examples. I don't know whether they are here. Work examples. Oh, yeah, some of the questions are there. Oh, so work examples. It's not there.
No,
Right, so
there's nothing.
come again.
That's section 6. There's nothing there.
Sessions, they are work examples, self-assessment, they are work examples. See, work examples of this. So I have them, I have the work examples. So I am going to send them to you today. I think we almost, so I will send all the questions to you, please. The way, what I did for management accounting that you did not get time to read, and some of you didn't get a good grade. Have you gotten your results?
Not yet.
Not yet. So the last time the calculations were many, and the assessment question that we gave to was 29. It wasn't easy, and the questions too were similar. So actually, we got confused.
Sister, what are you saying?
Limited small.
What do you call it? Activity-based costing. I have worked the question put on your platform. I have worked the solution. It was on your platform. There are about 4 of them. I have worked them on your platform. This break-even question. I told you this break-even is coming. I told you this break-even question. You are going to use graph. I even told you are going to use these things. You don't take. Some of you don't come to class and you don't take things serious. What question that came that was beyond your listening? If you were very careful, you could have gotten all the questions. The questions, activity-based costing, some of you do it rough like that. It was the simplest of the question you do, and I've already worked it there on your platform. You don't have anything to say. You didn't learn. You didn't prepare very well. So public sector accounting shouldn't be slow. You hear?
It is well.
It is well. It shall be well. Okay. So now, should we continue or we should stop?
So let's stop. It's almost done.
Hey, we at the junior crowd.
Oh, sir.
Okay. You
Oh, yeah, sorry. Try questions
after the media. Why?
I think even it's time. We are
after we are floor.
No, I cannot ask or never.
4 o'clock. Why? And I've
your class 6 o'clock. Internet say maybe over 2 hours there.
More class 6 o'clock. But Sunday is more class 6 o'clock.
You see, sir, this semester there, you know,
Maybe it's every day I took. Yeah, some more.
From Monday. From Monday to Sunday, in that time.
Endure. And nothing good comes easy.
Yes, sir. Yes, sir.
But man, I didn't say, oh, I don't know, I didn't know we didn't be a biala.
Yes, how?
We didn't be a biala, we knowledge. Tomorrow,
Yes.
Okay, that's it.
And that's
yo, watching that.